welcome to BloombergQuint. Now, about 80% of India's workers actually work in the informal sector. Nearly half of the country's GDP comes from the informal sector. But unfortunately, most of the data points, at least the high-frequency data points that we tend to track, don't actually capture what's happening in that segment. It's an important segment. It's an important segment to try and understand what's happening in there, to judge the health of the economy. And that's exactly what Pranjul Bhandari has done in her latest report called India Informally Yours. She's kindly agreed to join us here on BloombergQuint to talk about some of the findings of that report. Pranjul, thank you so much for your time. Appreciate it.
Great to be here, Ira.
Pranjul, let me just first ask you to set the stage for us. We've been tracking high frequency data, mobility indicators, etc. But most of those fail to give us a sense of what's happening in the broader economy, particularly the informal economy. And without that knowledge, it's tough to judge the medium-term trajectory of the economy, isn't it?
Yes, that's correct. As you said, 80% of the labor force is informal, 50% of GDP is created by them. And we don't have high frequency, reliable data to see how they are doing. In fact, even GDP data in its first estimate actually understands, what's happening in informal by using proxies from the formal sector. And all of this generally works well when informal and formal sector are doing sort of similarly and moving in the same direction. But it can be argued that some shocks, for example, demonetization, even GST, the pandemic now may have hurt the informal sector more than it's hurt the formal sector. And just relying on formal sector indices can actually overestimate GDP growth.
Fair enough. Before I get to the informal part, let me just get a quick view on what's happening to the 20% of the formal economy. If one looks at the indicators that are available, particularly the sales of, say, corporate India, the kind of wages and the wage correction that we saw and then rebound that we saw in formal India, the broad indicator is that a large part of that 20% is doing reasonably well, although there is divergence within that as well.
Yes, that's correct. So 20% of India's labor force is formal. And on aggregate, they are doing relatively well. Their salaries have done fine. Large listed companies have seen their profitability grow over time. Their staff costs haven't fallen as much, which basically means that people who work in those companies are doing relatively well. In fact, this is the class, the top 20%, some of them urban affluent, who actually led the pent-up demand coming out of the first wave last year. They bought all kinds of consumer durables, from cars to electronics, furniture, and even houses. This year, perhaps they may not buy as many goods. They may pivot more to services because many of them are now vaccinated. But this is the class in general who've done relatively well.
Which then brings us to the informal part of the workforce. So again, here there are different segregations to keep in mind while judging broadly use the word fortunes of this segment of the economy.
Yes, that's correct. So the 80% informal labor force, I like to break it down between 40% who work in agriculture and 40% who work outside of agriculture. We can talk about each of them, but the 40% who are outside of agriculture are the ones who've been a bit of a black box. What do they do? How have they fared? And in my report, I've tried to actually flesh that out. So let me first start with the 40% who work in agriculture. Now, interestingly, their wages have done pretty well. And the reason is that, agriculture has been a resilient sector over the last 1 year. Monsoons have been good. They had some immunity from lockdowns. They produce essentials, food for which demand never really fell. And even the government has been fairly generous with all of its schemes like Narega, PM Kisan, and so on and so forth. So we find that the real rural wages of agricultural workers have been pretty good. When we think about the landed, even their incomes have been good. They get them a lot of money out of cultivation. And interestingly, we've also seen that in the last couple of years, their indebtedness has come down. So their burden to repay loans and all of that has sort of come down a little bit. So generally, this sector has done relatively well. Now, how does that matter? I think it does matter because coming out of the second wave, which has hurt them, they may want to actually demand more goods than they did coming out of the first wave. These goods will be probably goods that make them feel more secure, like a two-wheeler, like, for example, renovation in their house. It would be financed by the high rural wages in the agricultural sector that we've seen over the last 12 months. So for now, they may look resilient. My problem, however, is that what after this pent-up demand? How is their future looking? What happens in the medium term? And that completely is a function of medium term reforms. How we can diversify their income sources, how we can increase productivity of crops, better distribution, all the agricultural reforms that we were talking about in the beginning of the year, that will play a role on them in their medium term prospects.
Pranjul, a question on the sort of the not the landed part of the agricultural workers, but the other side. Is it surprising that agricultural wages have held up? I mean, one sort of theory that could be true is that as a lot of the urban workforce went back into rural areas and wanted to get back into agriculture, just the supply of labor would have depressed wages a little bit. But there isn't a clear indicator that that has been the case, right? Is there an understanding as to why agricultural wages have held up?
Look, I'm glad you asked this question, because it's very important to not think about rural India as just this one big block, but perhaps break it down at least into agriculture and non-agricultural workers. Because of the fact that monsoons have been good, demand for food never really fell, through the entire pandemic. Also, the fact that this sector wasn't put into lockdown. My sense is that agricultural activity continued to remain very robust. Wages continue to remain high, despite many more people now coming into the agricultural sector. On the other hand, the sense is that the non-agricultural workers are the ones who have taken the brunt of it in rural India. And sort of let me come to that now. When I said that 80% is informal, out of that 40 is agri and 40 is non-agri. Out of the 40 non-agri, about half work in in rural India and about half work in urban India. So those who don't do agriculture work but live in rural India haven't done as well. Their incomes have actually fallen. If we look at non-agricultural rural wages, they have actually declined over the last year. One of the reasons is that they work in sectors like construction, for which the drivers are not monsoon, for which the drivers are not food demand, for which the drivers are other things, for example, demand for construction activity. So these wages have been falling, they haven't done well. And that is the 20% in rural India that I worry about.
Okay, so this particular segment would have had some support from NREGA. I mean, we did see increased spending on NREGA this year. Also, there is a larger budget, although the data suggests a fairly large demand-supply gap as well. There is support, but you're still saying that it's perhaps inadequate. Otherwise, these wages could probably have held up well.
Yes, so so that it's sort of a puzzle, right? That agricultural wages are doing well, and yet you have people queuing up for NREGA works. The demand for NREGA has really risen, and I think the answer is the non-agricultural workers who were working in things like construction and some sort of small manufacturing in the rural economy. They are the people who have lost jobs, wages, and livelihoods, and they are the people who are queuing up for NREGA at this point. They are getting some help from NREGA for sure, but not enough. Because we are seeing a big gap between demand and supply. Demand is far outstripping supply at this point.
Coming to the urban part of the sort of the unorganized urban, and I think that seems to hurt the most, in the sense that you can see it all around you. People who have lost jobs in taxis, small jobs here and there in urban India. Has that emerged as the most vulnerable in all of this?
Yes, I think so. I think the urban informal have been quite hurt, and actually we don't know too much about them. And the big problem is that we don't have any good government schemes to target them either. We just have some survey data to understand what's going on there. Our sense is that they have been at the receiving end of what I call forced formalization. There is a lot of data which shows us that business and demand has been moving from small firms to big firms in urban India. And people who work in the small firms have been on the receiving end. And this is something to worry about. Even the PLFS data and also Azim Premji surveys, all of these together also show that unemployment rates in urban India have spiked. Self-employment has spiked as well. And the incomes earned by these people who are now suddenly self-employed because they've lost a job has actually plummeted. So these 20% urban informal are the ones who have hurt the most.
Under just the bigger picture, so I mean, for years the Indian economy has sort of wanted greater formalization for different reasons, but the dynamics are perhaps not linear. I mean, yes, in these kind of sort of event-driven formalizations, perhaps the demand for goods moves to follow the formal sector, but the ability of that formal sector to absorb these informal sector workers, people who ran, say, 10 people shops earlier, but now are looking for jobs, is not sort of a linear progression. So there is an interim period of pain is what we are perhaps experiencing. Maybe that's what we experienced after demonetization, GST, and now after the COVID crisis as well.
Yes, that's correct. My sense is that if you ignore the informal sector, there is a price to pay. And I'll give you three examples. Right after demonetization, more of the jobs were created in rural India because urban opportunities actually diminished. But rural wages are 2.5 times lower than urban wages. And what we saw over time was the fact that India's wages, India's demand, and India's GDP growth all began to fall. So, ignoring informal sector can cost you growth. The second is the humanitarian cost. For some reason, we assumed that informal sector will have the same reaction function to lockdowns as the formal sector. But we got that wrong. And that's why during the first wave of the pandemic, when we had this big national lockdown, there were painful accounts of, urban informal walking back home because they did not have any social security in urban India and they had lost their job. The other one is macro stability. My sense is that all of last year, India was probably one of the only countries where inflation continued to remain very high. My sense is that the informal sector, which creates a lot of the necessary goods like food, clothing, were disrupted to a large extent, and that became inflationary. So look, ignoring the informal sector can cost you growth, wages, jobs, and even macro stability. So that's one thing we need to think about, especially because our informal sector is just so big. The second point I wanted to make is that it's probably a good idea to break down formalization into forced formalization and organic formalization. On its own, formalization is a good word. It comes with a lot of efficiency gains, and the fact that the capital markets, stock markets are cheering the ongoing formalization, I understand from where they are coming. But in a country where the informal sector is so large, we have to pause and ask, how is this formalization happening? Is it because small firms are becoming from small to medium to large and jobs are growing and people are becoming wealthier? Or is it happening at the cost of huge disruption in the small informal firms? Because if it's the latter, then there are a huge number of people who are losing jobs and livelihoods. And if their demand falls over time, that will actually hurt the prospects of the formal sector. And over time, we can actually see GDP growth fall. These are questions that need to be asked right now. And I worry that there may be an element of forced formalization in what's going on in the economy.
I'll get to the policy side of it in a minute. But some of this is actually already showing up in data, right? I mean, you had pointed to both the household savings data and the bank deposit data. And I think, my colleague Pallavi Nahata had also done an analysis where it's very clear that rural sector rural economy deposits are starting to trend downwards in terms of growth, while the urban sector, saw a sharp growth in the last year or so. So these very stark divergences may not show up in an aggregate GDP number, but they are showing up in other ways.
Yes, look, I completely agree, right? Even in the agricultural sector, as I said, agri incomes are holding up because of monsoons, but non-agri incomes are not holding up. They are falling a lot. So I'm not surprised if on aggregate rural deposits are a bit lower right now than they were perhaps before the pandemic. And the same thing in urban India, that savings remained pretty high, and the pent-up demand to a large extent was funded by urban India, where we were seeing the formalization. So I know we are seeing this right now, but right now we are just seeing the direct effects. The fact that overall, savings are high, there's a lot of expenditure on pent-up demand, and we are cheering it. My worry is about tomorrow. What happens when the indirect impact of the beleaguered informal sector begins to show up and the demand falls. The same thing era has happened just a couple of years ago. I think the same thing happened after demonetization. And the beginning, the stock markets cheered, but eventually we found that even the prospects of the formal economy had begun to dwindle because overall demand, which to a large extent comes from the informal sector, had begun to fall. And then we landed up with 2019, which we know was not a very pretty year.
No, absolutely. Which brings me to then what we should, how we should use the study that you have done and all the information that we had to judge the trajectory of the economy from here on. So, first question, sort of more near term, how convinced are you that we will see some nature of pent up demand? And we were having another conversation with Sanjeev Prasad of Kotak, and he had the point that look, if we saw the pent up demand in the form of buying of fridges, cars, etc., after the first wave, these are not items you replace every 6 months. So, where will the second wave of pent up demand come from? What will be the nature of it? Any thoughts?
Yeah, well, look, I think the pent up demand was in the first wave last year was mostly driven by the urban affluent who came out, with very high savings after, 10 weeks of lockdown, and they bought all kinds of consumer durables, which you don't tend to buy year after year. This year round, generally their savings have been a little lower than last year. So the wall of money supporting the pent-up demand this time is a little lower. And also they've bought a lot of these goods already. They won't buy it again. My sense is the urban affluent will pivot to services to some extent, particularly those who have got more vaccinated. And we know that the vaccination rates are higher in urban India than they are in rural India. So there will be that pivot. The urban affluent will buy more services this time. The rural agricultural workers may actually buy more goods this time around than last year, simply because they've for the first time faced the pandemic. Last year they got by a little better. This time we know that the rural infiltration was very high. They may come out now demanding goods which make them feel more secure, like their own motorcycle, like some renovation in their houses. But look, I just think it's going to be a phenomenon of a few months. I don't think it's going to be a large, sustainable rural demand spree. I think it'll just be a phenomenon for a couple of months.
So beyond that, then we are looking at perhaps more modest growth in consumption. I mean, I think pre-pandemic we were growing consumption at about 5 to 7%. Correct me if I'm wrong. I don't remember the data points. But would you your thinking would be that consumption demand element would be a little bit lower in terms of growth?
Well, look, yes, and I think that's one of the reasons why my GDP forecast for FY22 is lower than consensus. I'm at 8%. I think consensus is closer to 10%. My worry is that a lot of people are just copying and pasting the pent up demand of last year onto this year. But as we discussed, many of those consumer durables have already been purchased. The purchasing power of some people has fallen over time. I'm not sure the pent up demand this year will be as strong, and that's one of the big reasons why I have GDP growth forecasts which are a little lower than consensus at large.
Is there anything that fiscal policy can do at this stage? I think they made it very clear that they are not, in favor of a large sort of urban jobs guarantee or any such plan. Maybe there are genuine procedural issues there in terms of implementing something like that in the short term. But the infrastructure push could help in some ways because it creates jobs, get money flowing. Beyond that, is there anything that fiscal policy can do in this scenario?
Look, one of the things that stock markets have cheered this time is formalization. But I said I'm worried it's forced formalization. I think what fiscal policy can do right now is to ensure that this formalization doesn't peter away very quickly. It sustains. And I think one way to do that is to protect the incomes and livelihoods of the bottom of the pyramid. So generally, three things, I think that should happen. Number one, all the rural social welfare schemes should continue for longer. Narega, PM Kisan, what have you. Try to keep it on for as long as possible. Second, on the urban front, we don't have any good, well-directed, well-targeted urban welfare scheme. The general sense has been that let the government do capex, and that will create some urban jobs, and that will double up as a social welfare scheme from the government. But the truth is that government capex is not very reliable. It is the first thing that gets cut, when days are bad. My sense is that the government has to invest in a good urban scheme. Of course, there can be debates on how it should happen. I know targeting is the issue, but we solved it for rural India via Narega. Let's try to do something for urban India as well. So that's my second, policy implication. And the third is to take all steps that you can very quickly to ensure that small firms are able to grow over time, from small to medium to large. Try to make formalization as organic as you can. And, a lot of things that can happen for this. For example, reduce the regulatory burden that comes on the back of growing. When you want to grow, there are a lot of new regulations you have to sign up for, and many firms just get very scared with that. So remove the regulatory burden of growing over time.
And in terms of monetary policy, then given the kind of picture you've laid out, they are perhaps justified in saying that, look, growth is fragile. We don't want to act in haste on inflation. Although, as you alluded to in the course of one of your comments, some of this forced formalization has perhaps also led to inflationary pressures, which, well, like it or not, we are an inflation targeting central bank now.
Yeah, I think, the time has come for the RBI to change its focus a little more and focus a little more on inflation at this point. We've had inflation which has been higher than 4% for 21 months in a row. True, for most of this time it was below 6%, but still being higher than 4% for 21 months is something that you can't ignore. My sense is that last year, the RBI was focused on buying bonds, was focused on buying dollars. It infused a lot of domestic liquidity. It had to forego its inflation target, to a large extent because of the impossible trinity. You can't do everything. You have to choose something. So they chose bonds. They chose the rupee over inflation. This year, I think they will have to focus more on inflation. Will they be able to do that? I do think some degrees of freedom are opening up. Like, for example, if the current account is going to move from surplus to deficit, the BOP surplus may shrink to a large extent, and the RBI may not have to buy as many dollars as they had to do last year. And that in itself could create some space for inflation control, a cap on domestic liquidity, which could be one of the ways in which RBI actually controls inflation. But however they do it, I think the time has come for the RBI to shift focus to inflation.
The big picture there being that inflation is a tax, and in a time like this, where anyway incomes have been hurt, high inflation is actually sort of detrimental to growth in the second order impact in any case, right?
Absolutely. It has huge welfare implications and is very connected to this whole informality topic that we're talking about.
Pranjul, we'll leave it at that. Thank you so much for explaining your report and your study to us. Appreciate your time here on BloombergQuint. Thank you for watching.
Great to be here.